that endeared her to me. You know, I was talking about, you know, doing other interviews for this, and, you know, some other athletes that we were talking to, and I said, you know, if we talk to you and this other person on the same day, we would just have to call it GOAT Day. And she's not the sort of, you know, sometimes in those cases you expect to be like, oh, that's really nice of you to say, but she was just like, yeah, that's great. Yeah, I mean, which I love. It's like, she is. Like, it's undeniable. You know, that's who she is. She's the GOAT.
Facts, Jason.
It's one of those things where my husband's like, is she wrong?
She's not wrong.
She's not.
Yeah, not wrong. You know what we say? You know what we say down in the South? It ain't bragging if it's true.
Exactly. So true, so true. Great stuff as always. Jason, be well. Enjoy your time out in Miami. Sounds like it's going to be fun as well. Bloomberg Originals Chief Correspondent Jason Kelly. Catch the deal with Alex Rodriguez and Jason Kelly this evening at 9 p.m. Wall Street time on Bloomberg Originals. Catch it Friday at 7 p.m. on Bloomberg TV. The podcast already available for download at Bloomberg.com and wherever you get your podcasts.
Hey, still to come, a pandemic darling. Yes, still struggling once again. That's next on Business Week.
Sony and Apollo Global Management made a $26 billion proposal to buy Paramount Global, the media giant that owns CBS and MTV. They say the offer from Apollo and Sony was described as a non-binding expression of interest. Story first reported by the Wall Street Journal. Shares of Paramount, again, they're up now by 14%. We've got Apollo Global up by 4%. Qualcomm shares are trading higher by almost 10% after the world's biggest seller of smartphone processors gave an upbeat forecast suggesting that demand for handsets is increasing after a 2-year slump. Again, Qualcomm up now by 10%. eBay shares are declining today after earnings. eBay now down by 2.8%. It gave a weak forecast for the current quarter, reinforcing investor worries that the one-time pioneer continues to lose relevance in a maturing e-commerce market crowded with competitors. Again, eBay shares shares down by 2.8%. Etsy shares, they are plunging 15.7% after the e-commerce company reported first quarter results that analysts said underlined weakness in discretionary spending. Etsy shares tumbling again today. We've got Etsy now down by 15.6%. Some of the other stories that we're following for you today, all eyes will be on Apple after the closing bell. Apple's report comes with a low bar and big buyback expectations. Its reputation as a haven that can outperform in all market conditions has been refuted this year. Complete coverage on Bloomberg Television and Radio. I'm Charlie Pellet, and that is a look at our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg at 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Turkey says it has stopped all trade with Israel over the war in Gaza. That includes all imports and exports. The Israeli government says it will work to create immediate alternatives by increasing local manufacturing and finding other suppliers. Hamas studying a proposal for a temporary ceasefire with Israel in a, quote, positive spirit as international pressure mounts on the two sides to reach a deal and end the conflict that has shaken the Middle East. Israel says it will only consider joining ceasefire talks if Hamas responds to the latest internationally mediated proposal for a temporary truce and release of hostages. At least 2,000 people have been arrested at pro-Palestinian protests on U.S. campuses since April 18th. That's according to a count by the Associated Press. Nearly half of the pro-Palestinian protesters arrested at Columbia University and City College this week were not students, and this student agrees.
But this is orchestrated, right? I mean, they all have the same signs. There's the same colored tents in there. This is orchestrated by somebody that's not here.
The NYPD has confirmed suspicions that outside agitators are involved in the protests, since 47% of the demonstrators arrested at Columbia and City College were not affiliated with the schools. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Massar and Tim Stenivek.
All right, Amy, thank you so much. Well, we are getting ready to wrap up this hour of Bloomberg Business Week. One more thing we wanted to bring to your attention. This is a story that's been trending high on the Bloomberg. It has to do with Peloton, which was once a pandemic darling when we were all unfortunately stuck home during the COVID pandemic. You know, we were all working out in our homes and we bought a lot of exercise equipment. It was a good thing for Peloton. Then as the world reopened, we know it was a very different story, Tim.
Yeah, it certainly was. Throw in a couple product recalls, some issues with products. That certainly didn't help at all. Needless to say, the company looked for a turnaround a couple of years ago when it brought in Barry McCarthy, formerly of Spotify and Netflix. He took over from John Foley, the founder and then CEO, back in early 2022. He set about overhauling the company. Now, Carol, he is out. This after he announced plans to step down. And the company, the board, saying that it's going to conduct a search to name a replacement. In addition to that, it's going to reduce its global workforce by about 15%. And in the meantime, a couple different board members will take over as co-CEOs.
Yeah, they announced a new restructuring program also. They're looking to cut annual expenses by more than $200 million. And as Tim said, cutting jobs, part of that plan. They're going to pare their retail showroom footprint and eliminate about 400 jobs. So again, the pressure continues. The company saying specifically that the objective of the cost reduction to align our cost structure with the current size of our business and position Peloton to generate sustained and meaningful positive free cash flow, which is a top priority for them. They put out a statement. By the way, Peloton is working closely with its banks. That includes JP Morgan Chase and Goldman on a refinancing strategy. Stock today was down as much as 16%. It also rallied 18%. Right now it's down 17%. Talk about that. That is like a, 35% swing, high to low, in just one day of trading.
Hey, speaking of swings, go back to December of 2020. That's when the all-time high for Peloton was. The market cap then for the company was about $47.6 billion. It's seen a decline of that market cap by more than 97% since then.
What did it trade for per share?
Back then, I don't have that in front of me, but what I do have is the market cap now $1 billion. Share back then Carol, was, wow, $162.
$2.98 as we speak. All right, everybody, for those watching on television, the close is coming your way. For those continuing with us on Bloomberg Business Week, we are also going to, of course, count you down to those Apple earnings, talk about that and some interesting stories in the new issue of Bloomberg Business Week, including Intel and its bet on Ohio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And very good afternoon, everybody. Bloomberg Business Week continuing here on radio, YouTube, Bloomberg Originals. We're 60 minutes away from the closing bell. And folks, got a bit of a risk-on trade today. I'm looking at most names, almost 400 in the S&P 500 are higher today. This as we see a lot of those big tech names once again fueling the rally, Tim.
Yeah, one of those names fueling the rally certainly is Apple. Those earnings are coming after the bell. 4:30 is when they usually cross. We're going to get reaction from some of the best voices out there, including our very own Mark Gurman, who's going to be joining us a little later.
Looking forward to that one. Speaking of Apple, GM is taking on Apple at the dashboard. Turns out it's not so easy, everybody.
Who would have seen that coming?
Go think.
It's tough. Also, more on tech. Intel going all in on Ohio. Will the struggling chipmaker pull off a comeback? That is today's big take. Also, one of the most read stories on the Bloomberg terminal.
It's also two stories in the new issue of Bloomberg Business Week hitting newsstands, also online at Bloomberg.com and on the Bloomberg. So we're going to take them, not take them down.
No, definitely not.
We're going to go through them. It's almost Friday, everybody. And we're also going to talk cybersecurity. We've got the president and CEO of the publicly traded company SecureWorks back with us. So looking forward to that. In the meantime, let's take a look at the trade and some of your top business stories. Here is once again Charlie Pellet.
Indeed, best level of the day right now. 1 hour to go ahead of the closing bell. Right to the numbers here. We've got the S&P up by 50 points to 5,069. A gain right now of 1%. World's largest tech companies certainly leading the rebound. The Dow up 358, a gain of 1%. NASDAQ up now by 241 points for NASDAQ. That is an advance of 1.6%. 10-year at 4.57% with a 2-year 4.87%. Spot gold lower right now by $12 the ounce to $23.07, a decline of 0.5%. And West Texas Intermediate crude oil up 0.1%, $79.11 for a barrel now of WTI. Bitcoin up 3.5%. Bitcoin at 59,278. So it is an up day for the Dow, the S&P, NASDAQ, and the Russell 2000 index of small cap shares. Seema Shah is chief global strategist at Principal Global Investors Europe, and she told us she does see a broadening of the rally, including small caps over time.
You need to know that rate cuts are almost around the corner, and you're very, very certain of that. So I know Powell is, of course, somewhat dovish yesterday, but as you look at the strength of the economy, I don't think anyone can have any real confidence that rate cuts are imminent by any means. So I actually think that this is going to take a couple more months than what we had expected initially for that small cap and that broadening out to really start to materialize.
And again, Seema Shah was interviewed this morning on Bloomberg Television. Carvana shares now up by 32%. Carvana reported stronger earnings with revenue topping expectations as the company digs into its restructuring plan and regains sales momentum. And again, Apple after the close of trading right now, we have got Apple shares up by 2%. We're going to be all over those Apple numbers as they break right around 4:30 p.m. Wall Street time. We are on Apple Watch. Our coverage will continue. Again, S&P up now by 47, a gain there of 0.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Mines today, but also I'd say every day, given that they're just essential to almost every manufactured good. That said, one chip company with its own set of troubles is Intel. It once defined Silicon Valley, and it's spent a decade flailing, now being overshadowed by other companies.
Yes, Bloomberg Business Week columnist Max Chafkin and Bloomberg News U.S. semiconductor and networking reporter Ian King writing about Intel staking its future on Ohio. It is today's Bloomberg Big Take. Also among the most read stories, as Tim said, on the Bloomberg terminal. Max joining us here in our Bloomberg Interactive Broker studio here in New York City, and Ian joining us in our San Francisco bureau. Guys, welcome, welcome, welcome. I feel like we all need this story because we talk about Intel a lot. We talk about semiconductors a lot. There's at least a problem from an American perspective when it comes to semiconductors. Most of the best ones, Max, are actually made in Taiwan.
Yeah, and of course, this is the industry, an industry that the U.S., basically created. Silicon Valley is called Silicon Valley because of Intel and the ecosystem that it spawned of making these high-end chips. Unfortunately, as Ian has been writing and covering for the last few years, Intel has really fallen on some hard times. No longer able to make these leading-edge semiconductors, and with that, that creates geopolitical problems, for the United States, as well as, of course, business problems for, a company that's still very important, still a major player in the chips industry.
Hey, Ian, before we cut to current day, I found one of the most fascinating parts of the piece was the history of Intel in Silicon Valley and the folks behind Intel, the folks behind Moore's Law as well. Give us a little bit of a history lesson for those who are not as deeply steeped in chips as you are.
Yeah, Gordon Moore, Robert Noyce came out at the birth of the chip industry, which kind of really started with East Coast companies like Fairchild, and they really brought this industry to this coast, and now it's become, as Max just pointed out, synonymous with Silicon Valley. They saw an opportunity and really brought sort of engineering and manufacturing prowess to what was in the 60s really kind of a science project, an experiment. And they really created this modern industry that sort of spans the globe now, and that, as we learned during the lockdown, was so important to the world economy. And this company, this icon, just lost its way, basically about 2015, made some really poor decisions that put us in the position we're in now.
It's not the first time we've heard this story where a leader is also, comes undone. But Ian, what happened in 2015 that really set Intel on a course for its undoing in some way, or opening the door for challengers to really kind of kind of become more of leaders in the industry?
Well, Max and I were lucky enough to actually get to walk up and look at the physical manifestation of this. And it was really a technology sort of fork in the road with a technology called EUV, made by a company called ASML. Key part of this process of making these semiconductors. And Intel, had a choice whether to adopt this technology with all of the problems that it had at the time and work them out, or whether to basically, ignore, sort of put it on hold and persist with existing technology, put it on hold, and that turned out to be a blind alley technologically. Its opponents, its rivals, TSMC, Samsung said, no, we actually fancy having a go at this. We think we can make it work, and they did, and they took the lead away from Intel.
Which brings us to today, Max, and where we are when it comes to not just Intel's problems, but also what the U.S. government is now trying to do in order to, alleviate the situation, at least for the United States. Give us an update on where the money's coming from and where it's going right now.
Yeah, so Intel, as of 2021, has a new CEO, Pat Gelsinger, who essentially his pitch was like, bring back the old Intel. People know Intel for manufacturing.
He was there for years.
Yes, exactly.
Sorry,
yeah, I should mention that. This is a guy who's been at Intel, except for a brief interlude at EMC. He's been at Intel since like 1979. He mentored under Andy Grove, the legendary CEO, and it was sort of like, get back to manufacturing. This was a defining feature of what made the company successful, which it's helpful in two ways. One is that, in a lot of ways, like, chips are a volume business. If your volume starts to go down because your manufacturing isn't so great, that's going to have lots of knock-on effects, right? And it's also helpful because of politics, because Gelsinger was reading the political moment in a very savvy way, and you had Joe Biden get elected, with the promise of restoring industrial capacity. You had, as Ian said, the lockdowns and the chip shortage, sudden realization, and you had, China and the fact that TSMC, which is based in Taiwan, is very close geographically to China, to mainland China, and the prospect that Beijing could decide to invade, and that would put the chips that we rely on at risk. So you have this kind of swirl of strategic reasons reasons, political reasons, and Intel now is betting big. I mean, you mentioned Ohio. They're also doing major projects in Arizona and also in Oregon, where both those places they've had significant operations before, and you're talking about tens of billions of dollars, and then the Biden administration coming in with their own money, $19.5 billion from the CHIPS Act on top of some state funds. So it's a lot of money on this thing. We need to say, like, this is risky. There's no guarantee this is going to work. TSMC right now has a pretty substantial lead.
And they're also building plants here in the United States, Max.
Yeah, they're building plants, again, with support from the Biden administration. Again, this is a big strategy, although when you look at, the size, the Biden White House has given more money to Intel than any of these other companies. And what Intel is trying to do here is very ambitious. This Ohio site is enormous. I mean, I went there at the end of last year, and it looks like a kind of like a muddy field. It doesn't look like all that much, but it basically goes on as far as the eye can see. And already you've got 1,400 people working there, construction workers. I mean, there's a lot of action there. If it were built out, I mean, this would be like $100 billion site. It would be, as Gelsinger likes to brag, it would be the biggest chip factory in the world.
All right, so Ian, right now a massive muddy field, but it's not going to be that way. There's a lot of money going into it. It takes a couple of years to get this up and running. So I wonder, first of all, the time that it's going to take for Intel to get this done, and ultimately, what guarantee does it have that this is the right bet, that this is the right strategy? Where will the marketplace essentially be maybe in a few years?
Yeah, I mean, if I knew that, I'd be in a different position. But no,
fair.
But instead, you're stuck with us.
Yeah.
But those are the questions, right?
Yeah. No, that is absolutely the tension that exists right now. Just because he's building these plants doesn't mean the orders will come. Right? That's very important. Intel, on its own, Intel at its current level is building way more capacity than it needs. The bet, and it's very clearly a bet, as Max pointed to, is we're going to build all these plants, and then we're going to persuade these companies that hated us, that suffered at the consequences of our strengths for years, to give us orders, and we're going to build their chips as well, because that's the way we're going to play this. That's the way the world is going. This outsourcing model is only going to get stronger, and the only way we're going to win in this is to be part of it. And so far, they don't have any customers. The only customer is themselves, and that's not enough to basically fill all of these plants are going to get built. That's the big bet.
We'll talk about tension from customer, right? Like,
yeah,
that's...
Well, that is the challenge. I mean, the assets that they have, and one of them is this, this machine that Ian mentioned, which Gelsinger managed to negotiate early access to. So we actually saw when we were in Oregon, the one of two of these machines that exist in the world. The other one, is at the ASML, headquarters. So it's really the only one that was fully assembled. They have early access to that. Maybe that'll allow them to help jump ahead. The other thing that's probably more important, because all the other companies are also going to get this awesome looking machine, is political. They have an advantage in that they are kind of an American national champion, and we've even seen the Biden administration talk that way, about the fact that, like, we as a country need to support this, because if Intel were to fail or to get broken up or to exit, leading edge manufacturing as AMD, their main competitor, did, that would be a problem for the U.S. So there is the prospect of further political support from what they already have. So
national security concerns, like, this plays into big time.
Exactly, national security and Gina Raimondo, the Commerce Secretary, just some weeks ago, sort of floated this possibility of a second CHIPS Act, right? Like, kind of, now who knows if there's the political will for that, but it does seem like Intel has this advantage that some of these other companies don't, and though it remains to be seen whether they can capitalize on it.
Ian, as Max mentioned, the both of you got to go to many different places, actually, for the reporting of this story. California, Oregon, Ohio, Arizona, among other places.
Some great pictures, by the way, online. Highly recommend everyone check it out.
Yeah, very multimedia-focused story, so do check it out on the terminal or at Bloomberg.com. Talk about what you saw, Ian, at D1X, the company's research and development fab just outside of Portland, and describe the scene for us, because all of that was so new to me.
Well, and this is why, I mean, it was great to go with Max, because he was kind of looking around and watching the robots going by on the ceilings and things like that. I've been in these plants before. I'm lucky enough to have been there. The one in D1X, to be honest with you, is a bit like Times Square. There were way too many people there because there's a lot of work going on, a lot of experimentation, a lot of research and design. If you go to a typical production fab, there's nobody there, and there's nobody there for a reason, because everything's running smoothly and everything's done by robots. If you see 2 or 3 people in a production line, that's about how it should be. So, you know, it's very difficult to convey to people what is going on in all of these machines, because it's all going on in these machines, and that's a good sign. If there are people there, it's a bad sign. So you think of an auto factory and robots and things like that, there's no comparison in the level of complexity of manufacturing that is going on in these chip plants, and the numbers alone reflect that. $19.5 billion sounds like a huge amount of our taxpayers' money going towards one company, but compared to the amount of capex that they have to deploy in a year, it really isn't very much at all.
You know, and when you go into these places, I mean, just the procedure of getting in is complicated and creates a sense that, you know, you're entering the holy of holies.
I mean, you're doing something like, you're not scrubbing in for surgery. It's even cleaner than that.
It's much cleaner than surgery, and you know, you have to put on special gloves, and then a Gore-Tex suit and a hood and a mask, and then gloves over your gloves. And you know, it's funny because you're going through this entire process because the air in this clean room, it's called a clean room, the main factory floor, has to be, you know, way 1,000 times cleaner than a hospital operating room. But that air doesn't actually touch the chips. Like, I mean, even there, you're a long way, because the chips are protected inside of an even cleaner environment inside of these robotic things. And like, even to see the features that are being cut on these chips, you know, you obviously can't see them with a naked eye. They're even on the newer chips, they're not even, the features don't even refract light. So it doesn't, you wouldn't see any evidence of them. You'd have to use basically an electron microscope. So again, like Ian's saying, it's just a level of manufacturing complexity that is extremely sophisticated and novel. You know, Gelsinger said, you know, each wafer, the chips come from these big silicon discs that are called wafers. Each wafer is an experiment, and you do really get that sense. You know, all of these companies are making these extremely high stakes bets every couple of years, and if it goes wrong, as Ian mentioned, you know, then you can turn this, you know, great American industrial giant into something that is really gasping just in a few years.
This line I love: the obscene cost, complexity, and time involved in this microscopic ballet makes sense only if you can do it at high volume, which means having tens of thousands of wafers in production at any given time. I mean, it's a big bet. Ian, big bet by Intel. If this doesn't work, then what for Intel?
I mean, the economics are brutal, right? As we were just indicating, and we saw very recently, Intel has put the numbers out there for its manufacturing operations. It's been brave and said, look, this is where we are. This is how much better we need to get. The difference between making money and losing billions of dollars is very, very small, and it's all about yield. It's how many of these tiny things can you make, and how many per production run can you get out of this amount, set fixed amount of money that you're getting in there. The yield, everything, it's just so difficult. And if at the end of it, you're not first to market, you're second or third to market, you're late, something like that, maybe these things that can sell for tens of thousands of dollars each, suddenly you're selling them for less than it costs to make. So it's hard to convey just how quickly this industry can change and how brutal it is.
Max, 5 seconds. Is there a picture of you guys all in the white gowns and everything?
You can't even recognize us. I mean, you know, there's a picture maybe of Ian, but we're not even sure.
You're just like this.
Who are these people? Unbelievable reporting. The story that we all need to know to understand Intel. Bloomberg Businessweek columnist Max Chafkin and Bloomberg News U.S. semiconductor and networking reporter Ian King. Coming up, we're talking cybersecurity.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Equities have halted a two-day drop. We have got stocks holding close to session highs. Right now, we're looking at a 1% gain in the S&P 500 index, with the S&P up now by 51 points, S&P at 5,069. The Dow up 364, up by 1%. NASDAQ ahead of Apple earnings. We've got NASDAQ up 246, up now by 1.6%. Traders also gearing up for tomorrow morning's jobs report. The 10-year, 4.57%. The 2-year right now, 4.87%. Spot gold is lower by $13 the ounce. Gold down 0.6%, 23.06 on gold. West Texas Intermediate crude up 0.1%, 79.11 a barrel on WTI. Bitcoin rallying 3.2%, 59,133 on Bitcoin. Today's advance for stocks comes a day after Fed Chair Jay Powell said it is unlikely that the Fed's next move would be to raise rates. Mona Mahajan is senior investment strategist at Edward Jones.
We do think that there hasn't yet been signs that inflation is re-accelerating. That is the one thing that has given us some comfort. We think that they are biased to cut, and we do think at least one cut is coming later this year. Keep in mind, this is what's supposed to be a multi-year rate cutting cycle. So it wasn't just 2024. They had outlined 25, 26.
Mona Mahajan was interviewed this morning on Bloomberg Surveillance. Qualcomm shares rallying after the world's biggest seller of smartphone processors gave an upbeat forecast last night, suggesting the demand for handsets is increasing after a two-year slump. Qualcomm shares today, they are advancing right now. We got Qualcomm up 9.9%. And of course, just over an hour from now, the big story will be Apple earnings. Apple ahead of that report up 2.2%, complete coverage on Bloomberg Radio. Again, recapping S&P at 5,070, up 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. Well, United Health CEO yesterday told lawmakers that his company is still trying to determine why its computer system were left vulnerable to hackers who perpetrated a devastating cyber attack. Carol, reminder, the intruders into United Health's system, the huge medical insurer, they got access to a hoard of health and personal data. The company's CEO said the trove might cover a third of Americans.
That's a lot. That scares me. That's just one, albeit very prominent headline in the world of cybersecurity from recent days. No doubt will be among the topics discussed at next week's RSA conference, the major cybersecurity event that takes place annually in San Francisco. I've been there. It's kind of an interesting place.
Did you feel safe? Did you feel like your data was safe there?
I think I kind of did. I don't. Do we ever really feel completely safe? Let's see what Wendy Thomas has to say. She's President and Chief Executive Officer of the publicly traded small cap SecureWorks. She's joining us from Atlanta. Wendy, nice to be talking with you again. Kind of set the scene for RSA. I mean, I feel like in the ground, we've talked about different things that were top of mind when it comes to cybersecurity. What is top of mind? Because it does feel like some of these hacks and these invasions, if you will, into data and our privacy are becoming bigger. And I almost feel like maybe closer to home, but I don't know. Do you tell me?
Absolutely. We see it in the headlines. And we certainly heard from DNI Haynes this morning on ransomware attacks up 74% last year. The interesting thing around the submissions at RSA, the security experts who are looking at this every day, three things appear to be the main themes of the conference: artificial intelligence, information manipulation, so think about deep fakes and some other things there, and career burnout from the security analysts who are really never out of the front lines of this fight. So all three of those are pretty important to all of us.
The one that surprises me the most to hear from you is career burnout. And I'm wondering what the implications are for your industry. I mean, is there a talent war happening right now? And is there a concern that with burnout, you won't have the folks who are necessary in order to be on the front lines when it comes to this? I don't want to call it a war, but it kind of feels like it is.
It certainly feels like it. At least emergency responders is a good parallel here. And there's been a gap in security talent in this industry really from the beginning. It does seem to be exacerbating in terms of the pace of attacks going on. The important part there is the ability to leverage emerging technologies, including AI, in order to start to scale scarce talent. And what we need to think about as a community of business leaders and government officials is how we both grow the talent pool and scale the talent pool with investments in technology.
How do you do that?
You do that by doing things like SecureWorks does, partnering with universities to build that talent, building career paths and talent inside of companies. But it's also important for organizations to understand that the security experts aren't the only ones responsible for security. I mean, CEOs absolutely have to take the front line in setting the tone that we're all in this together, and any company's security is only as strong as its weakest link. So cyber awareness and training for the entire employee population is just as important for supporting those analysts as developing those analysts themselves.
You know, Wendy, I think about the conversations we've all had together and with you specifically, and it's how the narrative has changed in the tech world in a big way in terms of artificial intelligence and Gen AI, right? And increasingly, it's just creeping into every conversation that we have in almost every story. Having said that, one of the things our Bloomberg Intelligence team recently did was this whole idea of like kind of where your data is going to be in a Gen AI world and where you want it to be. And, you know, the cloud folks say, hey, it's safe up in the cloud and so on and so forth. And then those who do all the big enterprise systems say, no, it's better to have it on premise. And I'm just curious that what are you guys thinking about that, or what are your clients saying about, like, help me understand, where is my information going to be secure, safe, and all that good stuff?
Absolutely. So the top concern around the sort of LLM models of generative AI is that your data can be leaked, your user data, your company data can be leaked, or frankly, just put up into one of those tools unknowingly by an employee, and then that information is available more widely. It's a combination of both the security of your data, which isn't just about being on-prem or in the cloud. That's not really. It's about the configuration of the security around that, and it's about the way that you're using that data is a challenge in terms of trust. When you're talking about probabilistic models, even with your own data, to the extent that those models are giving you a different answer every time, it can be dangerous to use the answer in a kind of consistent or accurate way that you can trust.
Hey, I want to shift gears a little bit and talk about the landscape out there and just what you're seeing from customers, because we got some news earlier today that Amazon is going big when it comes to CrowdStrike and actually replacing other defensive tools with CrowdStrike's safeguards, dropping, this is from Amazon Web Services, dropping other security products in favor of CrowdStrike's cyber threat protection and response offering. This is according to an announcement from the two companies today. CrowdStrike, I think fair to say, a competitor to you. How do you watch news like this?
So we actually view CrowdStrike as co-opetition. So our technology works across more than just endpoint, which is what CrowdStrike is. We work across the entire network landscape, to cloud, to on-prem, to endpoint, to data workloads and SaaS applications. And so it's really important for our customers to be able to say yes to whatever point technologies that they choose to use. But what we see is that the adversary wins when they bypass or weave in between those products because they have compromised credentials, right? They have stolen the ability to log in about a third of the time. And so our ability to detect and protect against that, beyond great antivirus type of tools like CrowdStrike, is a fundamental partnership for us. Now, we do see customers like Amazon looking to reduce the number of vendors that they work with, to consolidate both in terms of spend as well as just management of multiple vendors. And so our platform's ability to scale organizations to work from one interface across whatever underlying cloud or security technologies they have in place is a pretty powerful way for them to scale that management.
Wendy, how do you look at the industry? Like, I feel like so far, yes, there's been issues, no doubt about it, right? And you've had ransomware and institutions or companies held hostage until things were dealt with. I guess, I always think about it from my take is like my fear of, my bank account, my investments, like that kind of thing being tapped. How do you guys think about, okay, wait, the system for the most part, things have been working fairly well? Or are you always kind of on pins and needles saying, someday there's just going to be something that really kind of shuts down our world as we know it? It's just a matter of time. And I hate to be I'm not trying to be, gloom and doom and stuff. I'm trying to be real because bad things do happen.
Well, there are a couple thoughts there. One, you see CISA with the recent Critical Infrastructure Act looking to get proactive in protecting those things that, as you're talking about, could potentially be very disruptive for all of us. You know, emergency services, healthcare, food. They're so vital that incapacitation there would be debilitating. So what I see is that the U.S. government in particular has been incredibly proactive in recent years in protecting from that type of event that you're speaking of. The other good news is what we see in sort of business day to day is that the vast majority of breaches that are occurring today can still be remediated by basic security hygiene. And I know it's not that fun, and we've talked before about you know, buying a treadmill doesn't mean you lose weight, but doing the basics in security either as a citizen, using passwords and multi-factor authentication, as well as what companies are doing if they have that hygiene in place, really very much can be prevented and or the damage mitigated.
Wendy Thomas, always good to check in with you. Thanks for taking the time ahead of next week's RSA conference. That's Wendy Thomas, the president and CEO over at the publicly traded company SecureWorks, joining us from Atlanta.
Hey, coming up next, folks, we're going to talk a little bit about the markets. We're going to check in with Louis Navalier, chairman, founder, and CIO of the company that bears his name. He's going to join us from Florida. We'll talk about the rally that we're seeing and what we've seen in terms of the rate moves this week.
Hey, before that, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. A new tally by the Associated Press finds at least 2,000 people have been arrested at pro-Palestinian protests on U.S. campuses since April 18th. After nearly 300 were arrested at Columbia University and City College, another encampment popped up at Fordham University, with the administration taking immediate action to suspend the students who were involved.
They don't have access to the university until their case is resolved. I do agree with that. Yeah, if you're going to interrupt our classes, then you should be reprimanded for doing so.
Protesters returned to Columbia University even after the encampments and Hamilton Hall were cleared. But the hall, still remains an active crime scene. President Biden said he would defend the right to peacefully protest on college campuses, but he draws a line against violence.
Violent protest is not protected. Peaceful protest is. It's against the law when violence occurs. Destroying property is not a peaceful protest.
The president also warned against anti-Semitic intimidation against Jewish students and threats against Muslims. There was no hush money paid to the women at the center of Donald Trump's New York trial, that according to the lawyer who represented the women. Keith Davidson was the lawyer for both Playboy model Karen McDougal and adult film star Stormy Daniels. Davidson testified his efforts may have helped Donald Trump win the White House in 2016, texting the editor of the National Enquirer at the time, quote, "What have we done?" The insurer of the collapsed Key Bridge in Baltimore is set to make a $350 million payout to Maryland. The Wall Street Journal reports the check will be just the first large payout in what will likely be a fight over who will foot the more than billion-dollar bill. The insurer, Chubb, along with the state and the families of the victims of the crash, will likely sue the ship owner and others to recoup losses. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks powering higher. We are very close to session highs ahead of Apple earnings after the close of trading. S&P right now at 5,060, up by 0.8%. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Afternoon, Shaw. That's right. U.S. stocks with a bid today, with the Dow currently up 277 points. The S&Ps are higher by 42, and NASDAQ rises by 1.4%. The U.S. 10-year yield falls to 4.57%. Gold is down 13, but oil is in the green, and Bitcoin is higher by 3.2%. Among the main 11 S&P sectors, only materials and healthcare were in the red. And leaders to the upside in the Dow, Boeing and Amazon, while 3M fell 1.2% and led to the downside. After earnings, Carvana soared 33%, Wayfair gained 16%, and Etsy fell by 17%. In deal news, Sony and Apollo have made a $26 billion all-cash offer for Paramount, and Glencore is considering an approach for Anglo American. Wrapping things up, like you said, Apple reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody.
TikTok, right?
TikTok, everybody. It's about 18 minutes left in today's trading session. Just coming off our best levels of the session. Charlie, of course, just breaking down the numbers, but it's really some of those big tech names that are really fueling the momentum. NASDAQ 100 still up about 1.2%. So the leading equity index, if you will, on a percentage basis at this hour, ahead of Apple earnings. It's a big one.
Well, we got a great guest on this because he can not just talk about the broad markets, but also some names out there that are on his radar, because he says the next great investment opportunity when it comes to AI, Carol, is in the companies that are expanding the electrical grid. Okay? So
Yeah,
not just the NVIDIAs, not just the super microcomputers. This is like the next wave of AI.
Which makes sense. All right, so let's get to it. Louis Navalier is with us, chairman, founder, and CIO at Navalier & Associates, joining us once again from Florida. How are you?
I'm good.
Well, it's good to have you here. I guess let's just start big, broad macro before we get into kind of some of your thinking about AI, which seems to creep into every conversation we have, including several today. But having said that, Fed, macro, eco, anything of note that you think investors need to be paying attention to?
Well, your best investments are still hardware related. Obviously, that's NVIDIA and Supermicro. Both are running 200% sales growth. I know Supermicro went down, but after its announcement, but they did guide higher above analyst estimates, so it'll be fine. Microsoft did a much better job coaching how OpenAI is now contributing to their bottom line, so that there's some hope there. But Meta basically sent out the message that they got to spend more on hardware before they can boost their AI efforts. So really, the plays are hardware and just building the power grid, and that's the real problem. Is if you read the new EPA rules, they basically don't want traditional power plants anymore. So it's going to be very hard to.
What do you mean by that?
Yeah.
Well, it's all over the Wall Street Journal today, but basically, if you do a gas plant, you got to do carbon capture, and that takes forever to get approved. So by the time you get the carbon capture approved, it'll be too late. And they do want the gas plants to run at only 25% capacity because they want to encourage, solar, wind, etc. But the real problem we have in America is we don't have any transmission lines. If you transmit electricity a long ways, you're going to lose it in the air. That's that crackle you hear. But there are direct current grids. New York has one from Canada for hydro. California has one from the Pacific Northwest from hydro. But we're going to have to put in all these direct current grids to send green energy everywhere, and that's just not happening. But we do also have to build more power now because of all the cloud computing going on. I was in Reno where I have offices, And every mile up in the hills where I live, we have diesel generators because the grid can't handle the air conditioning load. And our power bills have tripled out there because they're pretty green out there. They're putting solar throughout the desert, and but the bills have tripled. And I think the cloud computing centers will stay there for a while because they open up at night and then they cool off because it's desert and the deserts get cold. But if electric rates go up the way they are, the grid's going to move. It's going to go to wherever the electricity is cheap, and that's either hydroelectric, nuclear, or someplace like Salt Lake City, which is all coal-fired. That's where all the government server farms are, ironically. And it's just a mess, and there's no coordination. And so we do like the construction companies because immediately they got to build more power, and so that's like Quanta Services, MCOR, stocks like that. And so they'll benefit as we add more generating capacity. But yeah,
Louis, I was going to say it's probably a good segue to talk about energy stocks because you argue that that's crucial to hold right now, not even though referencing everything you just talked about. You're talking about geopolitics, escalation in the Middle East or Ukraine.
Well, the big issue is there going to be an incident? So right now we have Iran and UAE boosting production. Iran's at a record level right now. But if Ukraine decides to blow up the pipeline from the Arctic for Russia, that would be a disaster, and that would probably wipe out that production for 3 years. Those pipelines will freeze in the winter. So, obviously there was a natural gas pipeline blown up. Obviously they've attacked 5 refineries in the last couple months. Biden administration told them to knock it off after 3. They've done 2, including one after they got the aid. They blew up the Trans-Siberian pipeline in 2 places to screw up Russia's trade with China. So, they've sunk a third of their naval fleet with their drones. I mean, it's they're very innovative, and I just worry about that kind of disruption. Shell basically proved that LNG is the place to be. I've got an LNG stock, Dorian, based in Bermuda with LNG ships. But again, the Biden administration put the kibosh on LNG until after the election to suspend all new expansion until environmental reviews. So it's confusing.
So are you buying the major integrated oil companies or no?
Yes.
You are.
I like Conoco. I know they missed by a penny. I like Exxon. I know they missed, but they have Guyana and they're getting bigger. They're going to buy Chevron stake in Guyana.
And the FTC, it looks like Exxon will be able to conclude the takeover with Pioneer. So you think that's a good thing for them? You like that?
Yes. Yeah. Yes. And then I have refiners like PSX, MPC, that's Marathon. So I have selected refiners. They always make money when we go from winter to summer fuels and vice versa. But, we are the Saudi Arabia of natural gas, and we really should use it. The sad thing, and I'm from Berkeley, California, so I'm trained in everything green. The sad thing is if you don't use the gas, they're just going to flare it. So what are they doing? I mean, it doesn't make sense to me. Let's at least let it spin a turbine, generate some electricity.
I just want to mention, because you said you liked Eaton Corporation, it's up about 30% this year. You mentioned MCOR, it's up about 60, almost 65%. And Quanta Services is up about 18%. So even with these moves up, you would put more new money into it and just got about 15 seconds.
Yeah, they rank well. The analysts are still upgrading their estimates, and of course they beat.
All right, good stuff. I feel like it's a laundry list of companies that maybe we need to reach out to and talk a little bit about it. But I agree with you. Like we were just talking this week with Ruchir Puri, the chief scientist at IBM Research, about accelerator chips and the importance of, with Gen AI, the amount of power, and we've got to make chips that more productive because of the power demand.
You were out on Monday, but Will Wade stopped by, covers nuclear energy, talking about the nuclear reactors that have been shut down around the country, some of them now looking to get opened again.
It's amazing. Hey, Louis, thank you so much. We always learn a lot and think about things a little bit differently. Louis Navalier, chairman, founder, CIO at Navalier & Associates, joining us once again from Florida. All right, folks, just about 10 minutes left in today's trade. We're counting you down in just a moment. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. All eyes will be on Apple after the closing bell, 4:30 p.m. Wall Street time. Apple's report does come with a low bar and big buyback expectations. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
There are a lot of headwinds that they are facing, and so the estimates have come down. But the real kicker to me is what are they going to show around generative AI? I mean, really, China's story is known. It's embedded in the numbers at this point of time. But if they can come up with, a large language model that's going to feature in their next version of the chip, which they are going to launch another iPhone in September, that's going to drive huge demand, a refresh cycle that everyone is anticipating, and there is pent-up demand.
Bloomberg's Mandeep Singh, and of course we'll have our Mark Gurman and Anurag Rana, Bloomberg's Anurag Rana of Bloomberg Intelligence, standing by to analyze the Apple numbers as they cross. Again, we're expecting that roughly 4:30 Wall Street time. Apple ahead of earnings, up now by 2%. Sources tell Bloomberg Sony and Apollo Global Management made a $26 billion proposal to buy Paramount Global, the media giant that owns CBS and MTV. We do have Paramount Global shares up right now by 13.2%. Qualcomm shares rallying after the world's biggest seller of smartphone processors gave an upbeat forecast, suggesting that demand for handsets is increasing after a 2-year slump. Qualcomm shares today, they are rallying now. Qualcomm up by 8.8%. Again, Apple after the close of trading. Apple shares right now, they are up by 2%. I'm Charlie Pellet. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, in just a moment, we're going to head over to our TV colleagues and count you down to the close on this Thursday.
Do you want to know what earnings are happening after the bell?
Yeah.
Okay. Expedia,
Apple.
Booking,
Apple.
WW,
Apple.
Block,
Apple.
Live Nation,
Apple.
Coinbase,
Apple.
U.S. Steel,
Apple.
DraftKings,
Apple.
and then Apple.
Apple.
So you
No,
only care about
listen,
Apple?
No, I don't. I'm just having some fun. But
Yeah, I know, it's
when you
why
think about a
everyone's
company that can move the market needle overall, it's an over $2 trillion market cap company.
Yeah.
Lots of questions about consumers, growth, all this good stuff. China.
Corvo reported yesterday, and they are 37% of their revenue
Did I
comes
say Apple's reporting after the close?
Yeah, but
Okay.
listen
Yeah.
to what I'm going to say.
Okay, I'll listen.
Carol, listen.
I'm listening.
They get 37% of their revenue from Apple. And they reported yesterday that adjusted EPS and revenue for the first fiscal quarter trailed the average analyst estimates. The stock getting crushed right now. It's due to iPhone weakness in China weighing on the Apple supplier's guidance.
Yeah.
It's having its worst day.
How much is it down?
Worst day ever.
So yeah, listen, this is why we love to look at the supply chain function on the Bloomberg, because you look at all the pieces, and a lot of times when there's a supplier,
15%.
Yeah, when a supplier takes down their numbers, you've got to start thinking, okay, what does this mean for its biggest customers?
But Apple hired today.
Yeah.
So maybe the iPhone weakness in China is baked in, like Bernstein said.
Maybe it won't be
earlier
as
this week or
bad
last
as
week.
everybody forecasted, right? This
Yeah.
has to do with expectations and managing those expectations. And so maybe if it's not as bad as everybody anticipated, maybe it's a little bit better. Is that a good thing?
Speaking of expectations, the most read story on the Bloomberg terminal in the last hour is about who former President Trump is going to pick as his VP.
It's The Apprentice, the VP version.
It is.
Apparently.
It really is.
He's auditioning the former president, of course, who's planning to be hoping for a second term. He's running. I don't think officially we haven't gone through the convention, right? So it's like, is he the official nominee? Anyway.
Not yet, but he's presumptive, we could say.
Okay.
The people want names, Carol, and
Yes.
here are they, okay? Ohio Senator J.D. Vance, North Dakota Governor Doug Burgum, Florida Senator Marco Rubio, South Carolina Senator Tim Scott. That's according to people familiar with the deliberations as early as this week. Kristi Noem, Elise Stefanik.
Parading the top contenders for the slot in front of the rich benefactors. You said that, right?
Yeah, I did not say that part.
This
I just said
weekend.
names.
They're going to actually.
That's The Apprentice.
The swimsuit competition is going to be so much fun. I'm kidding. Beyond the Bell, folks, starts right now.
Can't take her anywhere.
Beyond the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. We're joined right now by Scarlett Fu, as well as Carol Master and Tim Senevik, as we welcome our audiences across all of our Bloomberg platforms, television, radio. That partnership, Carol, that still exists with YouTube. Here on a pretty good day in the markets as we await those earnings out of
Unless
Apple.
you're trying to short the market on the equity side. Just
who would do that, Carol?
People do that. Two sides to every trade. Having said that, you look at the S&P.
Wow, I learn something new every day.
I know. Markets 101. Welcome, everybody. All right, S&P 500, you've got more than 300 names to the upside right now. So you definitely feel like investors are willing to play in this market, especially when it comes to some of those big tech names.
Yeah, we're 30 seconds into this and nobody's talked about Apple earnings yet. Coming at 4:30.
Apple reports?
Higher by more than 2% today. Is there going to be anything regarding a buyback, additional buyback announced? What does China look like? Those are all big questions that investors certainly have, especially considering all the third-party data that we've gotten over the last couple of weeks.
Yeah, but the fact that the stock is down about 10, 11% so far this year, and it's lost about 7.5% since the last earnings report, a miss is pretty much priced in at this point. So if you want to look ahead, let's look ahead to the jobs report tomorrow. Yeah. That's going to be, ground zero again for the Fed in terms of what it does next.
But you're looking at the Russell, right? The Russell 2000 is up by 1.7%. So clearly it's sort of the smaller companies, it is the cyclicals, they're really starting to outperform, right? One of the top performing stocks, I keep going back to it, is a logistics company, like the real economy stuff.
Yeah, well, we should point out, that the best performing, at least of the major indices, are the Dow transports here, and that is on the back of some of the moves you're seeing in C.H. Robinson, some of the other truckers as well, but also the airlines, also the railroads, also a lot of the aggregate makers as well here. So maybe that is the cyclical trade, at least for this one day, as we await those earnings out of Apple. The Dow is going to finish higher by about 300 points, or about 0.9%. The S&P up by about 46 points, or 0.9%. The NASDAQ Composite higher by more than 200 points, or 1.5%. And your outperformer on the day, Dow Transports, up 2.5% here on the day, and the Russell 2000 going to close out the day higher by 1.8%.
All right, guys, to some of the individual gainers. Number one gainer in the NASDAQ 100, number three gainer in the S&P 500, drum roll please, is Moderna, which is up about 12.5% in today's session, reported a narrower first quarter loss than Wall Street expected, and the company also doing a lot of cost cutting, so that helped offset a steep decline in its COVID business. But we've got some new earnings.
Yeah, first quarter revenue for Booking Holdings beating estimates. First quarter gross bookings revenue coming in at $43.5 billion, beating estimates of $42.2 billion. Booking first quarter room nights sold coming in above estimates at 297 million versus estimates of 290.93 million dollars, 93 million, I should say. Booking first quarter revenue for 4.4 billion versus estimates of 4.25 billion, so a beat there as well. And I know adjusted EBITDA also coming in above estimates, 898.8 million versus estimates of 718.6 million dollars.
All right, to Expedia we go. The stock is popping in the aftermarket. Just a few headlines here so far. First quarter adjusted EBITDA of 255 million. The estimate was for 175.2 million, but you are seeing that stock really pop higher here in the aftermarket. Remain, it's up about 3.6%. We'll look for some more headlines on that one.
WW earnings also out as well here in the most recent quarter. The company reporting revenue that came in a bit above expectations. $206.5 million. The street was looking for $199.5. Net subscription revenue also tracking similar numbers. And as far as the actual number of subscribers there, it looks like pretty much in line with estimates, about 4 million. The street was looking for 4.01 here. Shares not really doing much here in after hours trading. Scarlett.
All right, let's talk about Amgen, the biotech company reporting first quarter adjusted EPS of $3.96, beating the consensus estimate by 2 pennies. In terms of the operating income, that was a miss, $3.08 billion. Analysts were looking for $3.12 billion. The outlook here, full year adjusted EPS anywhere from $19 to $20.20. That is a raise, a higher forecast, because previously it had seen $18.90 to $20.30. So just a shift up in terms of its outlook.
I just want to go back to Expedia for a moment. So it just looks like we're getting some more data out here. Their free cash flow of the first quarter coming in at $2.7 billion. That looked a little bit lighter. The stock is still up pre-market, but its gross bookings for the first quarter also came in a little bit light at $30.16 billion. Expectations were for $30.5 billion. I'm trying to piece together this and Booking, as well as MGM and the hotels. And I'm trying to get a macro read on it. I'm not entirely clear as to what that is yet.
Little commentary and context. They say, given the verbo drag and the rate of acceleration B2C thus far, we are lowering, the company says, our full year guidance to a range of mid to high single digit top line growth with margins relatively in line versus last year. Despite the slower than expected acceleration, the underpinning of the work we have done on the platform, blah, 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 that they have every confidence in the teams to continue to leverage their capabilities to drive stronger growth. So it sounds like a little bit of a tempering back, pullback of expectations.
Well, that's what I'm curious about. I mean, what does this say about the state of travel right now? I mean,
not everybody's traveling.
Yeah, I mean, we heard from the airlines directly. So, I mean, they basically said that at least for right now, things are pretty good here. But for these third-party booking companies here, are they holding up just as well? What are they seeing that's different?
What are they seeing that's different? I mean, a lot of it also comes down to how much people are willing to go through these third-party websites versus going through the airlines directly, or perhaps using their miles, their credit card points to cash in on that, right? Because we know those are devaluing pretty quickly.
Do you do that anymore? I'm curious. I mean,
Do what anymore?
Yeah, totally.
Going through the third-party
Oh, no, not that.
No, I do that. I do that.
You go right to the airlines?
I go right to the airlines.
I go right to the airlines.
Okay, well,
No, I don't do that.
Speaking of third parties, let's go back to Booking because we're seeing shares move higher in the after hours. Glenn Fogel, the CEO over at Booking, saying, talking about the strong start to 2024, touting the first quarter year-over-year growth in room nights of 9%, revenue of 17%, operating income of 76%, all of which were ahead of prior expectations. They're looking at higher frequency and more of travelers moving into the upper Genius loyalty tiers. So some movement there.
All right, let's go to Coinbase right now. Coinbase, reporting first quarter revenue of $1.64 billion, topping the average analyst estimate of $1.32 billion. It sees second quarter subscription and services revenue of anywhere from $525 to $600 million. Those are the numbers I'm getting right now. Again, revenue top line, $1.64 billion, higher than the consensus estimate. We have the bottom line number now, $4.40 for the first quarter EPS. Wow, analysts were looking for $1.07. I'm not sure if we're comparing like with like here. That looks too big.
Yeah, stock's still down about 2.5% in the aftermarket. Keep in mind, it's had a pretty good bump to the upside here in 2024, up about 31%. 6% of the float is shorted, so we'll wait for a little bit more context around this one to see in terms of that comparison.
Yeah, I'm looking at the numbers now. It looks like definitely not apples to apples, but our team here at Bloomberg will sort that out. But I mean, look, we knew they were going to benefit from all that trading volume that we saw in the first quarter, and that some of that had to, of course, fall onto Coinbase. So I guess wouldn't be out of the realm a possibility that they did have a pretty wide beat.
And that stock is down by over 2%. Are we learning anything, guys, in terms of the stock reaction move and then the numbers that we get? I mean, it does seem like if you underdeliver, if you underpromise and overdeliver, you do get some kind of pop, but that margin isn't that great. It's not that much of what we've seen, say, in the past.
I'm just going to point out to you right now, Expedia, which was rallying, is now down about 2.3% here in the aftermarket. So we're seeing some rethink in terms of some of the numbers. Just to rehash, first quarter adjusted EPS 21 cents. It was for an estimated loss of 24 cents. First quarter gross bookings, we talked about this, 30.16 billion, maybe a hair light. 30.5 was the estimate. First quarter cash flow was a little light, 2.7 versus 2.82 billion was the estimate. So again, a little bit of a pop to the downside. Now it's down about 3%. So quite a swing here in the aftermarket very quickly, too.
Yeah, continuing also to see Booking Holdings shares move higher by 9.4% right now. Revenue on the top line beat estimates. Revenue on, we saw the bottom line beat estimates as well. Revenue coming in at $4.42 billion. Estimates were for $4.25 billion. Still waiting on the company formerly known as Square, now called Block, in addition to Apple coming later.
I want to go back to what Alex was saying. Are we really getting much of a read into the stock price reaction? I'd argue that given the popularity of options, what you're seeing is just a lot of settling of those positions more than anything else at this point.
That's such a good point.
Live Nation earnings crossing the wire as well here. Their revenue in the most recent quarter, guys, looks like a beat, $3.8 billion. The street was looking for 3.3 here. And operating income also coming in slightly above estimates here, though you see the share reaction slightly to the downside here. But I mean, looking at this is 21% revenue growth, a 26% specifically on the concert revenue, if you will, here. And sponsorship and advertising also up about 24%. So pretty much a beat all around, but maybe the street was looking for something more given the share reaction.
Michael Rapino, over CEO and president of Live Nation, saying that global fan demand right now is stronger than ever. I think it makes sense in the wake of Taylor and Beyonce over the last few months.
All right, on to Apple we go, guys, in about 20 minutes or so. All right, that's a wrap. Our cross-platform, a lot of earnings getting through here on our cross-platform on radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We will see you same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Well, that was a whirlwind of earnings, no question. Still kind of going through some numbers here.
Yeah,
wow.
Still an earnings season.
Still an earnings season, fair to say. We heard from Coinbase, Live Nation, WW, Booking, Expedia, just to name a few of them.
Yeah.
We got Apple coming a little later. We'll, of course, bring you all those numbers as we continue to get them. Speaking of numbers, on the economic data front, we got data today that showed U.S. labor costs jumped the most in a year as productivity gains slowed, adding risks to inflation, that it's going to remain elevated. It comes after the loud and clear message from Jay Powell yesterday that rates will indeed be higher for longer. What do things look like, though, on the ground for America's businesses? To help us answer that question, we've got back with us Sharon Miller, president of business banking over at Bank of America. The bank out with an update to its annual business owner report. It's a survey of 1,400 business owners, including businesses of $100,000 through up to $50 million in revenue. Sharon, welcome back. Taking a look at the report, I got to tell you, certainly there's some concerns here, inflation, geopolitics, but I got to tell you, it looks like overall things are going pretty well for these business owners. They're optimistic.
They are, and thanks for having me back. I appreciate the time today. And we did find that as we surveyed clients that their revenue expectations, at least for the next 12 months, 65% of business owners told us that they expect their revenues to increase. So an overall optimistic tone coming from the small business community, I would say.
Is this pretty much across all industries? I'm not quite sure how you dice and slice the data, Sharon, but is it kind of everybody?
It is. I mean, we hear from our clients, and certainly we talk to clients every single day. And what we're hearing, there are some concerns, certainly. The political environment we're operating in, inflation, I heard that as we were leading up to this segment. But all in all, business owners, and especially smaller business owners, they really have control over their business in spite of what's going on around them. And so they have confidence that whatever the economic environment is, they will overcome. And so that's what we heard in the survey results, and that's what we're hearing every single day across the desk.
Well, that's interesting because, and listen, 65% of business owners expect their revenues to grow this year. 55% report they've made more money in 2023 than in 2022. Good numbers, strong percentages, but did 70% of business owners last time the survey was done expect their revenues to grow this year? Give us, I'm always curious, I know Tim is too, in terms of trend lines and how this difference is maybe from the last data set. So is it improving? Is it the same?
It stayed steady. So it was steady from our last report 12 months ago. And so it's right in line. So we haven't seen a dramatic increase nor a big decrease. And I will tell you what's interesting, as the segment from 20 to 50 million, so the mid-sized businesses, they were 80% plus saying that their revenue was going to increase over the next 12 months, which to me, that is something that is very good for the economy. Normally, we see the inverse where the smaller businesses are more optimistic versus the mid-size. And this time, we saw exactly the opposite. I mean, they're both very optimistic, but I would say the $20 to $50 million businesses in the mid-size category were 80+% told us that, I expect my revenue to increase over the next 12 months, and I expect to start accessing some capital, which we haven't seen quite as much of in that segment.
Okay, how are they going to access this capital? Because this is something we talk about all the time when it comes to private credit, when it comes to rates. What are you seeing as the source for capital for these businesses right now?
Well, I mean, you have your traditional bank loans, lines of credit. Certainly, we're seeing in the smaller segment where business owners are accessing credit cards. And, with that credit card, when we look at our data here at Bank of America, we see that it's on par with 2019. We have seen an increase in the amount of credit card balances. But what I would say is when you adjust that for inflation, we're right on par with 2019. So I do feel Go ahead.
Well, I was just anything concerning to you about that, about the mix of financing right now?
No, I mean, I feel that, we're in a very strong position with our clients, and certainly, when you see that people are starting to access their lines of credit, they're feeling better. We've seen, that trend line be sort of stable, where we weren't seeing as much coming through in the mid-size segment. And I do think that based on this survey and what we're hearing from clients, there's a tone of optimism out there that they're ready to get out there, they're ready to expand or take on an acquisition, and certainly some activity going on in the business landscape.
What color can you give us in terms of default rates on either their business credit cards, personal credit cards, or anything that kind of ties back to? It sounds like you sound very optimistic on many levels. So I'm just curious, what are you seeing in terms of default rates or any signs of stress for some of those businesses?
Yeah, I would say within our portfolio, at least, I mean, we're very, we work with every client, and we certainly are very strong on our client selection and making sure that it makes sense for the loan. And so we are at historically low levels on, our credit losses. And so I do feel good about our portfolio and what's happening with the health of our business.
Again, I kind of go back to this idea that, the data in this are so good. In this report, I was struck by that. But we do hear over and over again surveys of folks, and look, this is limited. You're talking to business owners here about how well things are going. But we hear from folks out there, especially ahead of the election, that they are dissatisfied with parts of the economy. And I'm wondering if you can help explain, not politically or anything, but the disconnect between what you see in this survey and what you see in the other types of surveys when voters are asked ahead of elections about how they're feeling.
Right, and I think even in this survey, and I've been president of small business for 7 years, and we've been doing this survey before I even got here, 10 years in the making for this survey. So we've got a long track record of history and going through election cycles. And what we find is that you'll see a dip in the confidence because of what's happening in the political landscape and the headlines, but what happens following that election is that there's certainty. And so there's, whether it's a Democrat or Republican, doesn't really matter. There's certainty in what's going to happen going forward. And so you do see the economy start to move again. So, it's a typical cycle that we do see as we look back at our data. And, it's kind of going through it again right now. We're in the election year. And so I'd also say that, business owners, where we surveyed, are more optimistic about their own business and their revenue prospects versus the national or the local economy. And so I think that has a lot to do with, especially in the smaller businesses, they have control over their business in spite of what's going on around them. They can control their activity, they can control what they're doing,
right?
And they can pivot because they're small.
Sharon, what's the demographics, the diversity of these statistics? I'm wondering if you can break it down, because B of A did a survey. I guess this was back in October. About 44% of Black owners have had challenges accessing capital, according to a survey done by B of A last fall, with more than a third of those respondents saying they didn't have a relationship with a lender. Some 35% said they don't think they will ever have equal access to capital. And this is a story that Bloomberg has out today about, after the pandemic, and there was so much entrepreneurial spirit and businesses, including Black-owned businesses, being created, and yet now here we are in 2023, and just 32% of Black owners were fully approved for a loan or line of credit, compared to 56% of white entrepreneurs. This was a March report from the 12 regional Fed banks. So I'm just curious, what color can you give us in terms of the diversity or the demographics of some of this data?
Well, this business owner report was from all different demographics, and we do release a survey on women-owned businesses, Black-owned businesses, Hispanic-owned businesses. So we do have other reports that follow. This one was very broad in nature, and so we didn't dive into specific races or age demographics. This is across the board, and we do put out other surveys like that. And I'll tell you, we find the same results in women-owned businesses and Hispanic-owned businesses, and those are all the things that we are doing here at the bank to make sure that people understand how to access capital, how to have those conversations before you need capital, so that you can prepare and get ready. So absolutely, those are reports we put out, and
Yep.
those are concerns that we want to address every single day.
Absolutely. Sharon Miller, President of Business Banking at Bank of America, joining us from San Antonio, Texas. Folks, we're awaiting Apple earnings, and coming up next, kind of an Apple-related story.
Yeah, about GM and Apple CarPlay. You don't want to miss it. This is Bloomberg Business Week.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. We are awaiting those Apple numbers. Apple shares did advance today by 2.2%. After the bell, though, we heard from a number of companies, including Expedia. The online travel agency is falling after hours, down now by roughly 8.5%. We've got Expedia down after first quarter gross bookings, missed estimates again. Expedia after hours down now by 8.66%. The world's largest tech companies drove stocks higher today, with the S&P up 45 to 5,064, a gain of 0.9%. Dow Industrials up 322, up by about 0.8%. And NASDAQ up 235, up 1.5%. 10-year 4.58%. The 2-year 4.88%. Spot gold today, we had gold moving lower by $16 the ounce, down 0.7%. West Texas Intermediate crude oil down down a little change, 78.96 a barrel. Important though, now with a 78 handle, down today by less than 0.1%. 10-year, 4.58%. That 2-year, 4.88%. Again, we are on Apple Watch. Apple coming up shortly, roughly 8 minutes from now. Apple shares up today by 2.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you for that update, Charlie. Do appreciate it. Okay, this was news to me, Carol.
Yes.
Last year, GM decided it would ditch support for Apple's infotainment hub, Apple CarPlay, which, by the way, you can get Bloomberg Business Week on Apple CarPlay and Android Auto, in its new EVs, so it could bolster GM's in-house platform. It's called Ultify. Perhaps not that surprising to those who followed consumer tech over the last decade or so. Doing something like that is easier said than done, as the rollout of the new software has been, well, flawed. Austin Carr and David Welch write about it in the forthcoming issue of Business Week magazine. You can read it now on the Bloomberg and at bloomberg.com/businessweek. Austin is Bloomberg News technology reporter. He joins us from our Boston bureau. I got to say, Austin, I had no idea that GM made this move until I read this story. And my first reaction was, why would the company do something like this? I mean, CarPlay is seamless. I think a lot of people would argue that it's really easy to use. And when it comes to consumer tech, I mean, I think it's fair to say that nobody really does it better than Apple. But then I started reading your story. It turns out that car companies give up a lot when they give up that dashboard space.
Yeah, I mean, that's totally right. In addition to being totally seamless, Apple CarPlay is also super popular. And you can imagine the more popular it grows, the more data, the more controls that Apple wants access to, the more unlikely it is that they're going to use GM's software, to use GM's infotainment apps, or to interact with their digital hub and how it controls the car or interacts with their EV batteries. And this became a sort of a major concern for General Motors in recent years, especially as Apple signaled that they want to expand with the next version of CarPlay into way more screens in the car to control everything from the speedometer to fuel levels to basically how you interact with the vehicle. And so GM basically decided last year that enough is enough. They wanted it to be a GM car, not an iPhone that you're driving, as one GM executive put it to me.
So wait, how deep was Apple already going in terms of its access to information about our cars?
So right now, if you have CarPlay, if you get in a Ford or sort of any major automaker's car, it's a plug-and-play process. So they project it onto the screen. It's just sort of an overlay on top of the infotainment hub that you have in the vehicle already. So it's a version of the iPhone interface that you have that's modified for a car. But Apple announced in mid-2022 that it wants to branch out into a lot more features of the vehicle. And regardless of whether it's tapping into those data sources or just syncing with them, it's essentially taking over the interface of the vehicle, from not just the console center screen, but all the gauge clusters that you have behind the steering wheel. So that's sort of what these car companies like GM consider mission critical components, and they were getting really wary of how deep that Apple was expressing its interest in reaching its tentacles into the car. And so that's why you see GM and Mercedes sort of drift away from that.
Okay, so you say Carol says she gets it. At the same time, though, Austin, as you point out in your story, and look, you got to look at where the data is coming from. It turns out that, at least according to Apple, people take very seriously whether or not the car has Apple CarPlay when they're thinking about purchasing it.
Yeah, according to Apple's research, about 79% of U.S. car buyers will only consider a car that's CarPlay compatible.
Again, from Apple.
From Apple. But they also say, according to Apple's research, it's also 98% of all new cars in the U.S. come with CarPlay. So that's sort of an addiction. You cannot escape that habit forming just with the few cars that are not CarPlay compatible, which is Tesla and Rivian, and that's about it. Every other car that's on the road that's new is CarPlay compatible. And GM said, we're going to take that risk because we believe in our own software, and we're going to invest in our own native platform to try to get people to use GM software rather than Apple's.
Well, I mean, how does GM internals, I mean, obviously we know what Mary Barra and team feel like, but I mean, do they all think that this is the right move, that, Apple can do things very well? And as you write about Michael Waldron, who got a new Chevy Blazer, but he wasn't so happy about not having CarPlay.
Yeah, we talked to a bunch of the first car that's being rolled out with this new embedded software platform that's completely Apple CarPlay free is called the Chevy Blazer EV. And it rolled out last year. We talked to a bunch of owners, including iPhone users, who tried to adapt to this car, and they had a lot of trouble. In fact, the software and displays ran into so many glitches that a lot of these systems became bricked. They just blacked out altogether. They wouldn't work to turn on. Apps kept crashing. Screens kept flickering, to the point that GM actually had to issue a stop sale and a recall in late December to fix all these software. So far from a great rollout, not a very Apple-like sort of onboarding process. But then again, some of the customers that we have talked to said once they got used to it and sort of got over that habit and ripped the Band-Aid, they actually kind of like GM's software. And I can walk you through some of the features, but there are upsides to those. Yeah, I mean, just as an example, so if you enter an address right now on the Chevy Blazer, because it's integrated with the hardware components in the car, which is something that Apple CarPlay cannot do. So if I enter an address in this EV, it can automatically predict battery capacity along their way of that route and suggest charging stations accordingly. So if I'm plotting a trip from Boston to New York, from where I am to you guys, it can suggest charging stations along the way automatically, whereas Apple CarPlay would have no idea what the battery life of your car is. So that's just one example of the type of embedded native software integration can sort of benefit consumers who just are used to getting a projection interface from Apple right now and not realizing there are better options out there when it works.
Austin, when it works, yes, that is certainly key. This is a great story, Austin. I couldn't put it down once I started reading it. Austin Carr, Bloomberg News technology reporter, joining us from our Boston bureau. Check out Austin Carr's story. He wrote it along with David Welch in the forthcoming issue of Business Week magazine. It's on the Bloomberg terminal. It's at bloomberg.com/businessweek. And one of the reasons we want to do this story at this time, Carol, is because speaking of Apple, we got Apple earnings crossing in just about 30 seconds.
Yeah, we're just kind of glued to the Bloomberg terminal. The stock is just up about 1/3 ahead of those earnings. Some key metrics, of course, we'll be looking at their revenue line, obviously sales in China, iPad, Mac, wearables, services, but iPhone, $45.8 billion. That's the revenue number that we're looking for the quarter. So that will be certainly a key metric. We're actually going to be tracking into our live blog as well. So keeping an eye on what it is doing. But it'll be interesting, right? Like you talk about some of the suppliers, or one in particular.
Yeah, Corvo.
Seeing a slowdown. Apple's a big customers of theirs. So here we have it. All right, folks, let's get to it. Apple, second quarter revenue, $90.75 billion. That's slightly better than the forecast of $90.33 billion. iPhone revenue, $45.96 billion, slightly above the estimate of $45.76 billion. The company, here's a big one, to buy back additional $110 billion worth of shares and boosting its quarterly dividend. That's the Apple playbook, and it is now up 2.3%. Initial reaction here in the aftermarket.
Yeah, I was going to say, who cares about those other numbers? It's that buyback of additional $110 billion of shares and boosting that quarterly dividend that certainly has investors expected. Some additional color here. Second quarter Greater China revenue, Carol, $16.37 billion. Even though that was a decline of over 8% year over year, it still did beat estimates of $15.87 billion. Second quarter revenue coming in above estimates at $90.75 billion. Estimates are for $90.33. That iPhone revenue also coming in above estimates, $45.96 billion. Estimates were $45.76 billion.
Apple raising that dividend to 25 cents a share from the previous dividend of 24 cents a share. So just to keep in mind that we start, slowly we've seen all of these big tech companies, the Magnificent Seven, offering up things like a dividend and so on.
Our own Mark Gurman all over this story. Here's his take initially. Apple sales declined less sharply than feared last quarter, held by stronger than expected demand in China, sparking optimism that the company's slowdown may be easing. Apple also said it expects to return sales growth in the current period, with revenue climbing by a percentage in the low single digits. That's according to Luca Maestri, the company's CFO. He told Bloomberg Television's Emily Chang in an interview.
All right, so let's get some analysis right now. Our own Anurag Rana is standing by of our Bloomberg Intelligence team. Anurag, you've got the numbers, and of course the additional big buyback of $110 billion worth of share, boosting its quarterly dividend. But it looks like, they came in either online or better than expected. But what's your smart take on this?
Yeah, I would say anything, the number that stands out really is that the decline in China was not as bad as I guess it was communicated before. So slightly better than before, but it's still overall still a negative number. There is no, and we'll find out on the conference call whether they make a comment or not, or what kind of guidance they give for next quarter. But overall, I would say the results were okay compared to, I'd say, going into the quarter when the pessimism is very high.
What's the big headline here? Is it the board approving plans to buy back an additional $110 billion worth of company stocks? Is it Apple increasing its dividend 4% to 25 cents a share? Are those the numbers that investors should be focused on right now?
I would have been expecting, them to buy at least $100 billion of stock every year. So that's, to me,
that's table stakes.
$110 billion. Yeah, it's just normal. I really need to know where the growth is going to come from, and how are things shaping up for the second half of the year. But most importantly, what are they doing in the AI, arena at this point, and what kind of features should we expect going forward?
So remind us too, Anurag, this company typically doesn't release the outlook in their call. I forget. I mean, they talk about it on the call, but not in the release, correct?
Yeah, that's not in the release. They're going to give some indication about each of the product lines on the call. So when we look at these results, services is good, iPhone modestly better. Overall, I would say in line to slightly better quarter, but it all boils down to the commentary on the conference call about how the things shaping up in the current quarter.
So if they are talking down China in particular, or revenues overall, that is going to get you concerned?
Yeah, I mean, that is going to, all the, the current, you would say, the minor beat will be all offset by if there are any comments, negative comments about, continued weakness of the iPhone in the third quarter. Because remember, if we go to consensus right now, iPhone revenue for next quarter is supposed to be down 2%. Mm-hmm. Now, remember, in this quarter was down 10%. So we need to know whether that minus 2% holds true, or are we going to see better than that, in line, or worse?
Shares higher in the after hours right now by about 4%. Fair to say we're seeing this reaction as a result of just expectations being so low going into this?
Exactly. Yeah, absolutely. This is a true game of where pessimism has been so high, and they go out and beat by a slight amount. But again, I will give you my final verdict after the call.
Yeah, and we're also seeing why we said Greater China revenue better than expected. It was still about $1.5 billion below a year ago. Sales are down considerably also in Japan, the rest of Asia Pacific, and in the Americas. The lone bright spot seems to be some minor growth in Europe. It's interesting on surveillance this morning, Anurag, Tom Keene asking one of his guests, is this a growth stock? Is this a value stock? How do you think about it? I know you don't give stock recommendations, but in terms of the growth metrics, it's always big numbers, but is it big growth numbers anymore when it comes to Apple?
No, we don't think it's good growth numbers for Apple at all, only because I think the big spike we saw during the pandemic, people buying a lot of iPads, computers, or AirPods, all of that is now, basically, you could say, haunting them. We are coming into a world where Apple's growth rate is going to hover somewhere between 0 to 5% for at least the next 2 to 3 years. Now, that's a good case. We really need to make sure that the China situation is handled, even before we can make that claim. Otherwise, it's going to be closer to that 0 to 2% rather than closer to 5%.
Anurag, our own Mark Gurman on the live blog making the point that the company declined nearly across the board on an annual basis, despite the fact that they beat Wall Street estimates. So that's overall revenue. The iPhone, by a lot. The iPad, by a lot. Wearables, home and accessories, by a lot. The bright spots are growth in services, and for the Mac due to the M3 MacBook Air. Let's talk services. This is a category that was fair to say was really created under Tim Cook, and it's just been an incredible growth over the last few years. What are the bright spots within services?
So in our view, services is really what's holding Apple together, only because it gives you an ecosystem feel. It's not easy to get out of the ecosystem and leave Apple for another product, and which is why, the numbers over here are truly important, because, this time they grew around close to 14%, if I remember correctly. That's better than what the company had initially, indicated. So this is a growth driver. This is what provides value to the ecosystem, and we are hoping that they're going to come out and, talk good things about the next quarter also from services, because this is the only growth driver left at this point.
Hey, Anurag, how much of now, it's just under a 4% gain here in the aftermarket for shares of Apple, how much of it is a relief that it wasn't worse than expected, especially when it comes to what's going on in China, but also that big boost in terms of buyback and the dividend?
Yeah, it is a big relief, frankly, because again, this is the one company everybody has been concerned about over the last 12 months. Now, that's why I'm saying this is not like, Amazon or Microsoft beating their cloud numbers by a big amount. It's just, somebody saying, oh my God, it's not bad enough. It's just okay. So it's a very different sentiment. But again, that's the way market behaves. Frankly, it's a game of expectations.
But I mean, how much of the jump in the aftermarket, is it mostly just that it wasn't worse than as expected, or is it also a big chunk of the buyback?
No, the buybacks, as I said, they do about $100 billion a year. So
Okay.
$110 billion is not a big deal.
Go to quarterly dividend increasing?
Penny.
Yeah, but once again, this is a technology stock. We really need to see the growth for this company to actually see their valuation go up.
Okay. So what has you concerned here?
I mean, I just want to know what's happening in China, frankly. We don't, this report has told me that the things in China are not as bad as what the street was looking at, but that doesn't mean it's still a decline.
How much of an issue is it, and again, Mark Gurman pointing this out, wearables, home and accessories, a big decline, dipping nearly $1 billion. He says it's shocking because it's the same quarter that Apple launched the Vision Pro, which is included in that category, its first major new product in nearly a decade. Bad news for Vision Pro?
Yeah, we were never expecting any major contribution from that device. Think about it, $3,500. Even if you sell 400,000 units the entire year, which is very big, you're not going to get that much revenue boost from it. So it's not really a needle mover. The thing that actually surprised me more was that the iPad decline was very sharp. Now, this is something that I think they're going to have to explain on the call. And they're launching a new series next week. So 17% decline is what I remember, briefly from a couple of minutes ago. That's a big decline in iPads also.
All right, going to leave it there. We know you've got lots going on. So appreciate your immediate response to Apple earnings. Our own Anurag Rana, who follows Apple for our Bloomberg Intelligence team. Apple shares, by the way, continuing to move up in the aftermarket, up about 3.5%. We've got another great voice for us on this. Dan Morgan, Senior Portfolio Manager at Synovus Trust. Dan, what jumps out for you here?
Well, I'm trying to come up with some great ideas different than what you've already talked about. Again, it was kind of a mixed report. I think, as you were talking about earlier, the big things that stood out to me were obviously the better than expected numbers in China. Obviously iPhone a slight beat, which is a positive. But Carol and Tim, it's kind of interesting. I've been following Apple stock for about 30 years. And I can remember back in 2014, they had a very similar situation where everybody was very negative. They were having issues in China and the stock was really floundering. And then they came out and they did a 7-for-1 stock split. They raised the dividend and they started buying more shares and everybody went crazy. So it's kind of interesting in this scenario. We see the dividend going up and we see, as you were talking about before, an announcement of $110 billion they're going to purchase in stock. It'll be interesting to see if they come up with anything else on the conference call in terms of, financial engineering to try to kind of reinvigorate interest back into Apple.
Well, I'm kind of glad you went there because, and this maybe just gets to how do we classify Apple. This is a behemoth. And I feel like whenever the numbers come across, maybe the growth rate isn't there, but revenue above $90 billion. Every time we have to kind of dissect these numbers, Dan, and we've done it a lot of times with you, this is a company that's very entrenched globally, kind of in the consumer space. And I think, is that enough to continue just by selling a lot of stuff, as long as they continue to sell a lot of stuff, even if the growth trajectory isn't there, it still makes it an interesting and an engaging company for investors?
I think you hit it on the button, Carol. Just think about the new Vision Pro. They're supposed to do $400 million in revenue alone just on that product. And I heard you just mention that the wearables missed. So it's kind of interesting. That's more than some companies generate in total revenue. And you're right. They have, 1.5 billion users. You put together the whole house, it's close to 2 billion when you look at all the different services that they have. And it's just a tremendous cash generator. I'm sure you've talked before, $172 billion with marketable securities and cash. They generate free cash flow of about 107 billion. So those numbers are kind of going back to the Warren Buffett school, kind of the old security analysis they used to teach out of University of Chicago. And, there's value in that. And even though we want to see an incredible new AI product that's just going to be like the next iPhone, it's probably not going to happen. And I think we just have to kind of accept that and look at the company just for what it is. And it doesn't mean they can't increase their stock price through these other avenues. Does that make sense?
Yeah, that makes sense, Dan. Hey, I want to keep you, because I also want to bring in Mark Gurman, Bloomberg News Chief Technology Correspondent, who was fresh off the live blog, has the write-up that you need to read about these earnings. But I do want to start at the top, Mark. Big picture, what sticks out to you? We've been discussing this nonstop for the past 12 minutes.
Yeah, so a big picture here is that Apple's doing a little bit better than feared, right? You still see declines across all of their segments other than the Mac and services, but a little bit better than what we had anticipated, or not what we had anticipated, but what had some had anticipated in China. Certainly a lot of optimism around artificial intelligence. But the big picture here is that Apple is no longer in growth mode. They're a stable company generating as much revenue as they did the past year and the year before that and the year before that. So nothing is necessarily broken here, but they do need to figure out a way to grow in the future, and just it's very unclear how that's going to happen.
Okay, that was my next question for you, Mark. What is going to return Apple to growth mode? And give us a little Apple history here. Like, when was the last time Apple found itself in this position, and what did they do to get themselves out of it?
Yeah, so I'm going to answer this question this way. The scariest line that you're going to see in Apple's press release is the wearables, home, and accessories number. That's about an $800–900 million annual decline. Pretty considerable, about a 10% decline there for that business that covers AirPods, Apple Watch, Apple TV, HomePod, you name it. Why is that so concerning? Because this is the launch quarter of the Apple Vision Pro, which is supposedly their future and their savior for growth. And if you're going to have that category the Vision Pro's in have one of its biggest declines ever in the launch quarter of your new product, clearly things are not going so hot in what you're betting your future on. The last time that Apple was sort of stuck in terms of lack of growth was really before the iPhone came out. So the company has been growing for a very, very, very long time, right? At some point, momentum runs out. The momentum has run out. The good news is that it's not like they're, cratering.
Hey, Mark, real quick, I did bring that up. I saw you wrote that about that in the our great live blog. Everybody should check that out as they're listening to this. And I brought that up to Anurag, and he made the point that, the Vision Pro is still very expensive, and even if they sold a ton of them, then it wouldn't have a huge impact just because it's still relatively early in the product life cycle. Why is it still so scary to you, though?
Well, I mean, I look at it differently. It is so expensive, and so if they do sell a ton of them, that should generate, a good amount of revenue, right? And we're not talking hundreds of billions of dollars here. We're talking about an $8–9 billion category. So an $800 million dip, 10%, is actually quite a lot. And so if they want to bet a lot on this product, it's going to have to start creating some momentum, but it's done nothing to date. And sales for these types of devices, especially at this price point, you're getting the bulk of those sales very early on in the process. You're getting them this quarter. So it only really goes downhill from here for the Vision Pro until they make major improvements on price and weight.
Hey, still with us. We're talking with our own Mark Gurman, Bloomberg News Chief Technology Correspondent. Dan Morgan still with us, Senior Portfolio Manager over at Synovus, as we are looking at Apple shares up about 6.5% here in the aftermarket as their second quarter revenue tops estimates, and they also boost their buyback. Dan Morgan, come on in on it. You've been listening to the conversation. Thoughts when it comes to wearables and the Vision Pro?
Yeah, I mean, that was one of Mark was mentioning, that was kind of one of the catalysts that people were looking out for, that potentially Apple could start to get some momentum back in the stock. We know they've got a new tablet that's supposed to come out, I guess, next week in May. They've got the big developers conference in June, and then, of course, they come out with iPhone 16 and the new iOS 18 in September. So there are going to be some opportunities down the road, guys. I mean, I know this report's not as exciting as we would have hoped. For Apple to kind of reinvigorate, interest in what they're doing. Obviously, along that road, hopefully they'll lay out some sort of AI roadmap that's a little more specific than what they have so far on the conference calls. But again, I think this is just kind of a quiet period right now for Apple, and I don't think we have to. I don't think you'd hit the panic button if you hold shares. Let's just see how this thing plays out.
Hey, Mark Gurman.
Not everybody's NVIDIA.
Mark Gurman, I'm wondering if you have a question from Dan Morgan, who's been following, Apple for 30 years, seeing times when, a lot of investors gave up on this company only to see it come roaring back. Do you have a question maybe for Dan?
Ooh, that's a good question. I don't have a question for Dan, but I'd love to engage in a back and forth with Dan on this. I mean, I agree with you. There is no reason to panic here, Dan, especially if you're a shareholder of Apple, right? I mean, you put money into Apple, it's kind of like a bond. You're not going to, lose all your cash there, right? But you're also not going to get those NVIDIA-like returns at this point. The question is, how long are investors willing to wait until there's a next big thing? And what I will say is, I don't anticipate there being any new next big thing on the horizon anytime soon. So we'll be looking out for that.
Dan, do you anticipate any next big thing being on the horizon?
I would agree with Mark 100%. I mean, I remember, guys, Carol probably, I don't want to date us, but we've been around a while. You're back in the 1990s when, we made the migration from a client server environment and we went to the IBM compatibles and everybody was into Gateway and Dell and HP and all the big PC makers were going crazy and Apple was almost ready to go bankrupt. I mean, they had a very very niche group of people that bought Macs. And then in 2007, they came out with the iPhone, and a couple years before that, they came out with the iPod, and the rest is history. So Apple's been down before, and Apple's had setbacks and been through periods of time when people kind of threw them aside. And, we'll just see where they are 10 years from now. That's all I can say.
Hey, I just want to end with Mark on AI because 10 years from now, I know that Apple would love to be a leader when it comes to AI.
You and
Mark,
I will be replaced by AI 10
maybe.
years from now.
Mark,
5
what's
years.
the vision? What's the vision that internally they're talking about at Apple when it comes to AI? Lay it out for us.
The vision of AI is integration, deep integration into hardware, privacy and security, and really not an Apple-designed chatbot like you've seen from ChatGPT, OpenAI, Google, Gemini, Microsoft, you name it. This is about integrated into the phone. I'll give you an example. We're on this call. My phone's in my pocket. I probably missed 20 notifications. It's Apple earnings season. I'll take my phone out of my pocket when this is done, and it'll catch me up with some AI and tell me everything I missed. That's the type of AI feature to think about when you're expecting AI features from Apple. Summaries, useful day-to-day tools based on artificial intelligence, not sort of 21 questions.
I mean, that's Apple's DNA, right? All about enhancing the value of the hardware and getting you to, buy that next phone.
Dan Morgan, 30 seconds left here. So something like that, as AI is integrated into the Apple model and they figure out, in how to monetize it, how important is that in terms of maybe making the growth trajectory change? And again, just got about 30 seconds.
I mean, it's huge, Carol. As Mark was mentioning, when they have taken a dive into the chip space, they're creating their own silicon. Mm-hmm. They do have a product they're working on called Ajax, which is kind of like a ChatGPT, but it's on your phone. So there are things they are doing, but as Mark was saying, it's all integrated into the iOS, into the phone. It's not going to be some new product that we've never heard of that just comes out of left field.
All right, well, I know I can't live without my iPhone, so bring it on. All right, guys, thank you so much. Mark Gurman, Bloomberg News Chief Technology Correspondent. Dan Morgan, Senior Portfolio Manager at Synovus Trust. On Apple, stock is up about 6.5% here.
This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. After hours, Apple now up by 2%. Apple sales declined less sharply than feared last quarter, helped by stronger than expected demand in China, sparking optimism that the company's slowdown is easing. Anurag Rana is an analyst with Bloomberg Intelligence. Moments ago here on Bloomberg Business Week, he told us he is waiting for the conference call.
So when we look at these results, services is good, iPhone modestly better. Overall, I would say in line to slightly better quarter, but it all boils down to the commentary on the conference call about how the things shaping up in the current quarter.
Bloomberg's Anurag Rana. Big move today for Carvana shares. It reported stronger earnings with revenue topping expectations as the company digs into its restructuring plan and regains sales momentum. The used car retailer reported net income of $49 million, a reversal of analyst expectations for a $116 million loss. Today we saw Carvana shares surging by 33.8%. For Carvana, those results are a sign that it may be moving past a period of restructuring and into better position to grow the business. Qualcomm shares advanced today after the world's biggest seller of smartphone processors gave an upbeat forecast suggesting that demand for handsets is increasing after a 2-year slump. Today, Qualcomm surged 9.7%. Also after earnings, we saw eBay declining today. It gave a weak forecast for the current quarter, reinforcing investor worries that the one-time pioneer continues to lose relevance in a maturing e-commerce market. Again, after hours, right now we do have Apple higher by 6%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Tim and I getting ready to wrap up on the Thursday edition of Bloomberg Business Week as we continue to watch Apple shares up almost 7% here in the aftermarket. It's a great story that we know our Asia team, headed by Doug Krisner and Brian Curtis, going to carry us through the next couple of hours. That's, as Anurag Rana said, as I feel like all of our guests, Mark Gurman, Dan Morgan, it was just like the expectations were low and everybody was like, phew, that it wasn't much worse.
Better than feared is like the headline.
Better than feared. There's your headline.
I think that's right.
Yeah.
Let's not forget a stock buyback, an additional $110 billion, and then the dividend. I think that gets
up a
increased.
penny, yeah.
Right. So,
but that greater China revenue.
Look, you mentioned Qualcomm, or Charlie just mentioned Qualcomm today in the regular session was up.
Yeah.
Ian King and I were speaking about the conversation with the CEO. In China, if you look at what's going on, there's a bit of an internal shift away from the iPhone, other Android devices, but a lot of the microprocessors, the chip modems that Qualcomm sells into the Chinese manufacturers, their demand is very, very strong. So it's not as though the China market is weak. Mark Gurman pointed out that if you look at the Apple revenue figure from a year ago, we're down $1.5 billion.
Right.
That's significant.
Well, I think the Qualcomm thing is really important. That was on the live blog too, that the point is that, the demand is there, for chips, but it's going to other phone makers who are selling into China.
Now,
that's the point.
Apple has some challenges, and I think the company is painfully aware of it. The pivot into India is one way to address it.
Yeah.
But I think that at least I was tracking the top live blog on the Apple earnings.
Yeah.
Europe was really the only bright spot, and a mild bright spot at that.
Yeah.
Hey, on the China story, Doug, I know I talk about this every few quarters, but it's worth repeating. Switching between an iPhone and an Android device in China is so much easier than switching between an iPhone and Android device in the U.S.
Why do you feel that?
Because the over-the-top apps that rule China right now, it's not like people are locked into iMessage the way they are here in the U.S. What they're doing is they're using apps from Tencent to pay their bills, to communicate with friends, to order food. These are the all-in-one killer apps that have never taken off here in the U.S. Facebook tried to do it a decade ago, and that's why it's a completely different story when it comes to stickiness with these handsets.
So I'm just going to throw this out there, and maybe you can comment on it. To what extent is it also indicative of just kind of a culture here in the U.S. where you buy into the entire ecosystem, right? It's not just the iPhone. then maybe you have, you know, a Mac.
Our home is an Apple home.
Right, right.
Yeah.
Done.
So that's another part of the story too, I think.
I completely agree.
And part of it is because it does work so well together that once you're in it, you know, it all works seamlessly, really, on many levels.
That's why another shout out
Full
for a story
transparency.
that's in the in Bloomberg Business Week about GM trying to essentially kick out Apple from their vehicles
Apple CarPlay, yeah.
Apple CarPlay with their vehicles. They're among the few companies trying to move away from Apple CarPlay, and it's a tough slog to do that.
Did you see the story on Huawei and this foundation in Washington?
It's incredible.
did that story.
Yeah, we talked to Katie O'Keefe a little earlier.
You know, she's only been with the company now for less than 2 months.
Yeah, I saw
and
that.
She comes, you know, swinging for the fences and knocks one right out of the park.
I was like,
unbelievable.
2
It's
months.
a great story.
What have I done in 4 years?
It's a great story.
Don't get us going.
It's a great
It's a
story.
really good story.
Yeah. Well, it's just it's interesting, and saying that if it was, what did they say, if there were different departments, or if it wasn't the way the foundation's for research.
But this is
that kind of gets them out from under the Treasury sanctions on Huawei.
But I think the key
Not
here
breaking
is
the law,
that
I
this
guess.
foundation, the grants that they award are for research in terms of light, right? And when you think about what ASML does with this advanced, you know, the extreme ultraviolet lithography that they use to create these chips, I think that's part of the story. So they may be using this research as a way of trying to find rival technology to ASML. That's my guess. I mean, I'm just because it's focused on light.
Yeah.
And it's the lasers, and that's the thing that
The chip war, the tech war,
exactly.
however you want to label it, right? But it's complicated, but that's an incredible story. Among
Happy
the most
Friday,
read.
Doug.
Thank you very much.
Yeah, be well. All right, guys, that's going to do it for Tim and me.